Federal Reserve Chairman Jerome Powell came out this past week. We're taping this on Friday. I believe he spoke on Wednesday morning. And you, in your reporting on this, you called his update dovish. And, I mean, and so like inside of what that means, soft and I don't know. Like the dovish thing. I never get it when economists say that.
So let me clarify. I thought he was going to be dovish. And then he basically came out and said a whole lot of nothing. Right. So, and the markets looked at it and it was like, oh, no news is good news, right? Stock surged.
Markets were pretty happy on Wednesday.
Right. Stock surged temporarily. So I thought he would be a little bit dovish. I thought he would say growth is slowing. We got a lot of uncertainty and we know how this plays out. Uncertainty usually causes growth to ease some more. Everything looks like it's heading lower. And so maybe we should lean towards more rate cuts. But we'll have to wait and see. That's what I expected him to say. He didn't do that. What he did is he came out with, we got uncertainty. We got more uncertainty. And when there's uncertainty, we do nothing. Wait and see. And that's exactly what he did. And so the market saw no news is good news. The Fed chair is not thinking growth is slowing. Whew, that's good. That's comforting if I'm an investor. And he's not thinking inflation's reaccelerating due to tariffs. Oof, that's comforting if I'm an investor, right? And so the market was happy about that, right? The other thing the market was really happy about is that the Fed seems to believe that the increase in the potential slight uptick in inflation coming from the tariff impulse will dissipate. They changed their summary of economic projections. They moved inflation a little bit higher for 2025. They moved the unemployment rate a little bit higher for 2025. They moved growth a little bit lower for 2025, right?
Mm-hmm.
Textbook effects of tariffs, higher inflation, lower growth, right? Higher unemployment. But then they just didn't change the long run outlook. They didn't change the 2026, 27, into the future outlook, right? Basically signaling that they think that, yeah, this is going to be short lived. Maybe a one-time price increase, maybe not a ton of retaliation. Because if you get retaliation, that whole forecast doesn't stand a chance. And so they're like, oh, maybe it'll be fine. Right. And it didn't change. They didn't change the forecast for the federal funds rate, meaning the markets already anticipated this. No change in the forecast for the Fed funds rate means no news. And the market loved it, right? The financial market, stocks surged. Everybody was super happy. And then the very next day, everything reversed again.
Well, and the one piece of news that came out, in the aftermath of Jerome Powell's, nothing much said, update was, President Trump, saying that, he would like to see rates, come down. And then of course, in the broadly, inside the DC and New York media bubbles, then, I'm seeing headlines about, Trump firing Jerome Powell or that being a possibility. I mean, for the benefit of our listeners and viewers, could you again explain the relationship between the executive branch and the Federal Reserve Chair?
Well, he's got to finish his mandate. Trump cannot actually fire the Fed chair. So that's not going to happen. That's just a whole lot of talk. The one thing that could happen, I hear people commenting on this all the time. Again, I don't take a stand one way or another.
No. I'm just talking simply procedurally here.
He cannot do it. It's not going to happen. The thing though that, I hear people talking about, which I think is just crazy, because the conspiracy theories that are out there, it's this idea that Trump would crash the economy just so the Fed would cut interest rates. That's crazy talk.
Right.
People stop. Come on now, right? That's just crazy talk, right? So ultimately, DC is doing its thing. I don't know, I found out recently, a really great economist is going to join the Council of Economic Advisors, as the chief economist in the White House. I think that's good news. Maybe we're going to see some positive out of it. I don't know. Again, I don't speak on policy. I could just tell you that I could tell you what's going on in the economy. I could tell you what to expect, going forward. And right now, I would like to see things quiet down a little bit. Mm-hmm. I just would like to see things quiet down. And just from very simple way of thinking about this, if you have a policy, whether it's a good policy or a bad policy, right? And you hit the trigger, you got to give it time.
Right.
You can see the impact.
Yes.
That it's having.
Yes. We've talked about that.
Right?
You pull the lever and it's not immediate. It's not like going through the drive-through window at McDonald's. Yeah.
Exactly. Exactly. So you got to give it a little time to see how it plays out and its impact, right? You can't hit the button again and again and again, because then everybody panics, right? And on top of that, you risk making a big mistake. You got to see how people react to it. You got to see what's going to happen, and pause. And then you hit it again, and then you pause and you see what happens. All these policy shifts at the same time are creating a lot of confusion. They're scaring people. And we're seeing it in the stock market.
Yeah.
So, that's all I got to say.
That's fine. I'll let you in there.
I don't know if the policies are good or bad. That's not my job. As an economist, my job is to kind of help people navigate the current situation. And that's it. And I really hope that we're going to be okay. I really hope that we're going to be okay. That's,
I'll say one thing and then we'll call it to a close, and I'll be short. The media could be doing a better job of reporting what is going on with the economy right now. And I think that the U.S. news media has struggled in its coverage of the economy historically. And so with that, thanks for your time.